Sunday, May 7th, 2:36 p.m. New York time. Going to discuss energy sector from the fossil fuels to the solar stocks. First, we'll look at the commodities of energy. Crude oil. This is a 3-year chart. Each candle represents a week. We'll see the price action. The bottom gray horizontal lines are zones that are demand zones where buyers have stepped in the past. And the top are zones that are supply zones where sellers stepped in the past. Often trade ideas occur at those levels. Current candle for the week, closed red, lower high, lower low. Huge wick on the bottom. Some people call them wicks. Some people call them tills. Some people call them shadows. So you may hear me refer to it one or two or three ways. What happened was it came down, tested this zone, demand zone of buyers. Buyers stepped in, bought it again, and bought it up, defending this still as a demand zone. We're here in the past, when it gapped up here, it went up into a zone, which was a supply zone of sellers here in the past. It had a follow through and then reversed, went lower. That event happened on a Sunday night because the futures opened Sunday night. That event was when OPEC cut back production. Cut back production to increase the price of oil. Free markets, that's what they could do. Remember, not all oil producing countries are in level 1 OPEC. There's different levels. Egypt is not level 1. Saudi Arabia is. So when that occurred, I waited. And then I went bearish. Traded bearish here using options. I already closed those trades and took profits. Since we did this event this past week, defending this zone, I traded bullish, so I'm still in bullish positions. Let's look at this on a daily time frame. Same zones, but we're taking down daily candles. So there was, we had passed where it closed on Friday nights, and then the Sunday futures opened up. Like I said, OPEC raised or cut back production, consolidation, impulse move up, and then I put my bearish trade on several here and actually laid into some more before it actually took out this low, and then I started to close them. So I had no more shorts left, bearish trades, sat on hands, waited, and just like I mentioned, came down here and I took my trades here. Opportunities are still here to trade bullish. What I did on both these trades, the bearish and the bullish, I used options and I did credit spreads. With the stock ETF USO. Okay, that was crude oil. Let's put it back here so again you can understand. We're near the lows of the year still, and they were the highs 2 years ago, last year. We'll go into natural gas, and that was last year, natural gas, all these highs. Natural gas at lows now. You see here, key levels, consolidation, breakout, consolidation. So let's zoom in. Look what's happening here. We'll zoom in some more. It's forming like a cup and handle, but let's put this on a daily time frame. So we're near the lows of the year. That's the high of the year. And look what we did here. That was one of the early lows of the year. Went higher natural gas, came back, retested it. See that red, number 2, big round number. It took it out there. Buyer stepped in, defended it. So again, this is holding up as a buying opportunity. Natural gas has a stock ETF. I've been trading that stock ETF, been trading as bullish using options, what's called selling put options for credit. Getting paid early. Putting this back here. So just understand this. Again, natural gas is pretty much near record lows for the past several years. Crude oil is in the range between the high and low. But if you want to take all this consolidation, it's pretty much still at the lows, crude oil. Yep. Buying opportunities, buying on the dips. If you're bullish, fossil fuels, which natural gas, crude oil, fossil fuels are dirty. If you're bullish, those are opportunities to buy the dips, the stock ETFs. Well, now let's go to look at a company that also is involved in the fossil fuel industry. Yeah. Shell Oil. It's a company based out of the United Kingdom. Look at this. Going higher, higher, higher. They've been bullish. Again, the stock right there, stock symbol. The lower the year, the high of the year. Look at that weekly candle. Did make a lower high, lower low, huge wick on the bottom. Bunch of buyers stepped in, defended it. Let's put it here on the 10-year. Here's the 10-year. That was a higher 10 years. That was a lower 10 years. Notice making momentums to the upside. Bullish, bullish, bullish. Dips, buy the dips, going higher. So the higher this year. Zoom in some more. Nice consolidation. One could expect it's likely going to continue momentum to the upside to retest these swing highs in the prior years. Well, I'm going to show you here on the daily chart right here. That day, there was a news event from this company. Yep. And that news event, the next day, had a gap up. Yep, it gapped up at a higher high, higher low. Directly from the direct source, not opinion of a media outlet news, which is garbage. Direct source, Shell Company. Yep, you go their PR department, press release department, straight to the press release department, not to, again, opinionated for-profit news outlet that was spent disinformation, intentionally. Nope, you go straight. So you can see their public release came out on May 4th, and they're doing a buyback program. The company is using their profits instead of paying labor more money or advance towards better technology or better tools. Again, the board member, the CEO, has the right to do that. And he decided, or she decided, to buy back stock over time. Well, companies have earnings. Publicly traded companies have earnings every 3 months. And those earnings per share, again, are based on the value per share. Buying back the stock takes shares off the market. So coming into the next earnings period, there will be less shares. So whatever the earnings amount will be, each share will have a higher value. I'll give you an example. Let's just say you have 100 shares and you buy back 3/4 of those, then you have 25 shares. But again, the overall revenue you're making is still based off the number of shares. So if you make let's just say this company is worth $500 billion. If you're taking $500 billion and dividing it by 100 shares, well, each of those shares have that defined amount, the earnings share. But if you take that $500 billion and now divide by 25 shares, obviously those shares are going to have higher value. You got it? It's a pump and dump, legit, legally. They could do that. It used to be illegal a long time ago. Again, regulators, Congress members changed that law. Yep. So again, this is an opportunity you as well could participate in. You could buy the stock. You could trade the options. I highly recommend you to get skin in the game, buy at least one stock share, just one. Practice with one share. Again, do this for a year, practicing with single stock shares, see how your portfolio goes. Apply good money management. If you're wrong, you get out of the trade. If you don't get out and you're wrong, you have a problem with money management. You shouldn't be involved in the financial business and manage your own money. Yeah. Well, let's look here too, because I'm going to show you on that day My plan of action took that day the news was released. I looked at the option chain and I did a bullish strategy, referred to a bull put spreads, collecting credits. These are the strikes I did. Collected $33. Yep. I know it says 33 cents, but each contract's 100 shares. That's equivalent to $33. Again, let's look at the option chain. What happened since then? Again, that's a credit that collected. Friday, when it closed, again, the same thing, 58, 57. 58, 57. Friday, it closed at $20. So the premium collected, because the stock went higher. Look, it closed 61.13. And when that trade was placed, the stock was 59.47. So one could have bought the stock and closed it Friday for profits, as well as done the option strategy and closed it for profits. Yeah, you're buying back at a low price, making the difference. Where the stock, you bought it at the price I showed you here. And then Friday, you sold it there. So either way, profits if you closed it on Friday. If you're still in the trade, well, then you hope this goes down to zero, because it expires June 9th. Yep. There's still opportunities to participate. Let's go further out. Let's look at this one, 16 June. And let's load up. So come Monday morning, you might consider participating in this. And the stock's at 61, so let's go lower. Let's look at 60. Just take it take it 5 strikes wide. There we go, 5 strikes wide. You collect $120. And what you're looking for is this price here, your short strike on the put, 60. We're looking for the stock to stay above $60. As long as it stays above $60, you're good. If this stock goes up higher, well, then the premium you collect melts away faster. That's good. If the stock goes sideways, then time decay. Yeah, if you don't understand what I'm talking about, these option strategies, well, I teach them. So you could pay attention on my Patreon page. The point is, you have several choices here. Buy the stock outright or trade these option strategies. Again, the option strategy I'm showing you here is advanced option strategy that has a higher chance of success than outright buying single options. Because if you buy the stock has to go up in your favor for gains. I just showed you here on the option strategy, this credit spread, the stock could go sideways. They could go even lower. Yeah. Again, short strike 60, as long as the stock stays above that. So if the stock goes down to from 61.13 to $61, if it goes down to $60.50, hey, I still have the opportunity to win. First, if I bought this stock at $61.13 and it goes down to $60.50, you're already losing. A lot of choices here. Let's go further. Let's start looking at some other economics. Solar panel stocks. Yep, solar panel. So there's the event that occurred. First, I'll show you the newswire. Oops. And this is the Shell company. We want to buy back stocks. Sector energy, industries, oil and gas, in their United Kingdom. Well, this past week, United States Congress pushing forward a bill for solar tariffs. Yep. The materials that people have on their roofs, backyards, solar panels. Yeah. So let's look at the opinionated news write-up. U.S. Senate votes to restore solar tariffs up to 254% in the Biden rebuck. So solar panels. Some come from Canada, some come from the United States, some come from Asia. Just to show you what's going on here, that if you put tariffs is a tax. It's a different name for a tax. So when products are being imported, there's that embedded cost on there as a tax. So when it gets to the consumer, it has a higher embedded price. This was done also with sugarcane in the past, because sugarcane is used as for what? Come on now. It's used in the ethanol. Yeah. So the United States is importing sugarcane from Brazil and other countries, and the United States corn industry lobbied to put tariffs on that. So Congress did that. And then you had corn that's also in ethanol, if you don't want to use sugarcane, that has not the tariffs. Yeah. Business blocking free markets, not good. So again, this is what the Senate is doing. Well, directly to the source, not from the opinionated media. Again, this story is posted on Yahoo Finance, but the story is written up by Bloomberg. Again, there's also write-ups of Fox News, CNN, bada bing, bada boom, all the for-profit media outlets. But again, directly to the source, the Congress.gov website. Yep, .gov, official Congress website. Lets you know here, directly to the point, solar tariffs. I highlighted that word solar so we can see where it is a few times, see what's occurring. China illegally subsidized industry. Of course, a lot of countries, it's not illegal. There's lots of countries that subsidize companies, businesses. United States subsidized farmers a lot. Tesla, Elon Musk company, United States government under Obama administration with Congress approval, build out, helped Tesla. The state of California also helped Tesla. Yep. They gave tax dollars to build out Tesla during the real estate bubble. Again, so this legislation that's using this wording, whichever Congress member, again, the Congress members are being lobbied by businesses included that word. Yeah. So it's interesting how they want to, and somebody should be calling them out, just that word used. So the tariffs. That being said, that would be having imported products more expensive. Again, this is specifically geared to solar panels coming from Asia. Doesn't say anything about coming from Canada or Mexico. Remember, tick for tack, they might do that. So let's look at the solar companies, solar stocks. First one, Charlie Sierra India, Quebec, Canadian Solar. Let's take this to a 3-year chart. 3-year chart, much of a consolidation here. And these have stocks, some have options, but I'm just going to show you the chart stock. They closed last week, inside candle, big wick on the bottom, demand zone, buyer stepping in here. There's a lower for the year, right here, this zone. Demand zone, supply zone. Interesting. Yeah, so you could buy the dip if you're bullish. Next one, DQ. Look at that, it's actually touching the supply zone. So again, look at every time I came down here on these dips, buyers stepped in. Let's remove this. Opportunities, if you're bullish, you might consider buying this one. Echo, November Papa Hotel, had that huge sell-off, followed through new low for the year, loser. Not time to buy yet, nope. Foxtrot, Sierra Lima Romeo, First Solar. Nice, very nice. Look at that trend higher up. So you have this retracement, buying on the dip, retracement, buying on the dip, retracement, buying on the dip, impulse move up. Look at that. You have a retracement. Inside candle means indecision. Maybe you consider buying. Let's put this back for 3 years. Look at that. This year alone, it's been trending up higher than last year. Nice. Very clear, bullish. Yeah, that big sell-off, something occurred there, but maybe if the market had a huge sell-off. Again, looking here on this one, yeah, that's been worse. So this is a nice trend on this one for solar. Juliet, Kilo, Sierra. Demand zone, buyer stepping in. Put it back for 3 years. See, massive consolidation. You're looking for these Opportunities for reversal, where here had consolidation, reversal went up. These are trade ideas, not to buy and hold for long term. Trade ideas. The trend might be for 1 week, 1 month, could be a year. Max, Mike, Alpha, X-ray November. Look at that. Last prior 2 week new high for the year. Nice. Let's zoom out. That was a midpoint. It almost took 3 years to get retested. Last year, rejected it. Finally broke above it. It's nice. Let's remove this. That nice new consolidation. Buyers stepping in there, defending it. Very nice. And let's look at a few more solar stocks.